few things. It's Thursday the 14th, number one. The second one is that it is Easter Eve. And if you are a celebrant of Easter, then I hope you have a wonderful weekend ahead. For those of us who are traders, well, who call ourselves traders, my goodness me, what a shocker I had yesterday. I'll explain that to you in a little bit. I mean, unbelievable. Anyway, let's go through and see if we've got any breakouts to be had on the pound today. Well, if we were here yesterday, then maybe we could have got that breakout due to, of course, the CPI figure that came out early yesterday morning, London time, of course. And the pound had a day out on that, and that was the source of my chagrin. I kicked myself in the butt big time. Didn't sleep very well last night because of that. And I'll get to it in a second, as I said. But there's no breakout to be had today because it's already happened on pound versus the US dollar. Therefore, we will move on to other things. Of course, with the pound, it now becomes a matter of two questions, three really. Retracement, consolidation. If retracement, how far? They're the questions that I have lined up for myself anyway. Should I go to, no, I won't go there first. I'll go to the good news first. The good news is, of course, that the trade that we've been in for more than 2 weeks now, Kiwi CAD finally gave us what we were looking for. Now, I know there's probably a heap of you in the room. G'day, John. How are you doing, mate? Good to have you back. I know you were back last Thursday, but I wasn't. Where was I last Thursday? Birthday party. Bloody birthday parties. Drive me nuts. Yeah, we've been in this one for a couple of weeks and could not for the life of me get a TP1 out of this trade until, against all odds, I've got to say, because the RBNZ yesterday did raise their interest rates, not as forecast by 0.25%, but by a full 50 basis points or 0.5%. And of course, you can see what happened. The market went, oh, that's good. Oh, hang on a minute. No, we actually want to sell the Kiwi. Go figure, which they did. And they did it in big licks. This Kiwi CAD trade finally went to TP1. And there it stayed when I went to bed shortly after that. And when I woke, because there was a CAD interest rate announcement yesterday, who did, and the BOC did raise their interest rates by the exact amount that was forecast of 0.5%, exactly the same as the Kiwi. But the differential now between the Kiwi and the CAD is still the same, of course. It's 0.5%. Kiwi's again leading the way with interest rate hikes, and as always, not as always, as has been the case recently, is now the biggest interest rate on the planet. And yet the Kiwi continues to fall. Well, it's had a little bit of a retracement thus far today, and I expect there'll be more of that. I'm targeting this area. If I was actually trading from here to here, I'd certainly be looking to get out of something there, and then I'll be looking to get back in or scale into this. If we're fortunate enough for price to get above the daily pivot, come back underneath the confluence area and retest that area, I will certainly look to add to my position at that point. Yeah, g'day, Lewis. Well, mate, you can't trade them all. You know, Kiwi CAD, I've been exposed to the Kiwi for 2 weeks or over 2 weeks. So adding to that was very, very difficult. Taking the position was even more difficult on pound Kiwi. Where are you going to get in? And we'll get to that in a minute. Guesswork. And, you know, who'd have thought that the pound was going to have such a big day as it did yesterday on the back, as I say, of that CPI figure. But even more mysterious. And I hope that Ash can shed some light on why that might be. And I know, look, technically, and that's why we're in the trade, right? technically, there were two ways to look at this, and the longer the stronger, you know, the mantra. Always is what we probably need to look at, and it was always a sell. As soon as it touched up here and gave me a double top, it's always going to be a sell, and that's why I am in this trade. But that interest rate announcement, you know, surely you would have thought would have at least gone to a resistance level. Well, it didn't. It just, well, it did, I suppose, on the smaller time frames, as I pointed out, went to that daily trade line and then just sayonara. Amazing. And like I said, the Kiwi just fell out of the sky. Why? I have no idea, apart from the technical reason. But you would have thought a 50% or 50 basis point interest rate rise may not have seen that particular result. Anyway, it is what it is. And it really played a part of, I was actually in front of the charts when pound took off yesterday. Sadly, I was in front of the charts because I did place an order on pound yen based on, and look, this is something I very, very seldom do, to be fair. But when I saw on the daily charts a game changer bar on Tuesday, this bar here, followed by an inside bar on Wednesday, I just could not take that trade. I thought that we'd get to here without too much trouble, and that's where my TP1 was. And sure enough, that news on the CPI figures came out and shot pound yen straight up. And was that my entry? No, that was my trailing stop. My entry was, why is it on this chart? Don't know why. Entry was there. Oh, there it is. Okay. So my entry was there. I don't know why it doesn't come up on the hourly chart. That's a bit weird. So 163.65. That was my entry. I probably got a little bit of slippage there. And then what happened? As I was watching it, it's not there, is it? Yeah, there it is. So I got taken in on this bar, took out the high, the previous high, and then sucked back like a blowfish. And it was at that point, I was watching the 30-minute chart, I think. It was at that point that I started to think, oh, look what Kiwi CAD did. It went, took out the highs or hit resistance and then reversed. So I moved my stop loss to where I thought was the best possible place. And I said to the Telegram group that I figured the best place for a trailing stop in, my stop was way down here. I had a 93 pip, I think, stop loss. And I thought the breakout area would be the place where this would be deemed wrong. And there's the breakout area there, really. And so I put my stop loss well below that area. But I was wrong, because that one was okay. It wouldn't have taken me out, but this one did. Took out my trailing stop, which was a small loss, yes, 20 pips of the 93 that I risked. But I was wrong. And I think there's a lesson to be had here, which is why I'm pointing this out. Cheers, Lewis. Where this move should have been, or where I should have moved my stop loss, was the, I guess, more obvious wrong point. If you're long, you're wrong. And it was underneath the bar that actually broke out. That's where my stop loss should have been, under there. And had it been under there, I wouldn't have got taken out. My trailing stop wouldn't have got taken out, and I would have got a bunch of money on this. So that's the reason I'm pointing this out. If you've got, if you're in front of the charts, number one, when news is happening, it is a bad place to be, from my mind anyway, because you can be turned around and upside down, and all the rest of it will go on within your brain that's trying to work out exactly what's taking place in front of you. and then your emotions come in and you just make bad decisions. And my decision, whilst I thought it was a good decision, I still do, was I just put my stop loss in the wrong place. It's as simple as that. And had I put it underneath that bar, I would have caught the whole lot of that move. So did I sleep well last night? No, I did not. I was awake at 3 o'clock in the morning, kicking myself in the bum. But, you know, I know this. I actually know this stuff and have done it 100,000 times before. Well, maybe 1,000 times before. But I chose to be as frugal as I possibly could, and that cost me all that, frankly, which is substantial. So, did I make up for it? Well, I hope so. The Kiwi CAD trade, I've now moved my stop loss to entry, which covers the small loss that I took on pound yen. But the upside here, or the downside here, is I should have made a truckload of money yesterday, and I didn't. I'm making money now if this stays in the area underneath here, and I still think we've got a chance of going down to what 83 cent mark. So that's worth staying in for. Now, just to continue the bad day scenario, the take profit 2 level on this trade was 85.20. Guess where we stopped going short? Yes, you better believe it. 85.21. Son of a bitch. 1 pip away from our second take profit. So again, you wake up.
Sorry, mate. Might be a trade in the FTSE.
All right, mate. Yeah, I'm only telling bad, sad stories here. So, so you go hard.
Okay. I was just waiting for it to shape up, and it looks like it may. So what we're looking at here is this trend line along here, which will match that weekly pivot. There's the prices for a short. So let's see if we get to the price. I mean, really, I just wanted to make sure I was letting you guys know there was something available before this thing gets to that particular point. So we may not have a huge rush here, but it looks like it may well get to that level. So my futures price is 75.35. So if it can get to that 75.35 level, then there is a trade short on the FTSE. This isn't a bad area to go short, but it just means that you're going to have stops further away, and you want your stops up here really. The trade on Monday that we were looking at went out really well. You know, we had a great day Monday on the trade, and it looks like we may well get this one as well. Let's see if we can just pop up just a little bit more here and see if we can get this trade on. It might just stop under that bar. Might just be this bar here. Let's just see how far that is away. It's about 3 pips away, which is okay. So anything between 75.32 probably and 75.35, I think would be okay here for a short. So looking for one more pop higher here, and if we can get it, then I'll be taking that on. I've got my shorts in the market as well, but this is just another opportunity potentially for the day. I might even put the order in instead, and then we won't have to watch it. So let me do this. Let's try 32. Before I sell it, there we go. I'm not sure why that's not on there, mate.
Can't help you, mate. Don't know.
Why didn't that not go? Okay, no worries. I might have to do this manually.
Do you need a break?
Should be okay. I'm going to go in there. There we go. It's worked out. I got it on manually instead. I put the order in. So we're going. Well, I'm going short here. Now you might want to put your stops at the highs. So let's see what that would mean. 30 pips to the upside. So you're looking, really, I mean, the idea for me is always kind of come out at first contact, and first contact's down here. So you can see that that's around about a 1-to-1 if that particular one works out. But there is some room here for the FTSE. There is this inverted head and shoulders, but the market just looks generally negative at the minute. So if this one doesn't work out, then I was speaking to John actually last Thursday and saying to him, we were going short here, and I was saying to him at the time, there was a little bit of danger it went up again, and I did take another short up there, but that's I've taken profit on that one, so I'm just kind of like stepping it down now, mate. If I can get a little bit of profit on the day from this one, what I'll probably end up doing is using this level here as something to take off. It just depends on how low I perceive this to come, and I think, yeah, it might well get to that point. Really, my break-even level on the FTSE is about there. It might be a bit higher now, but I'd like it to come down here, and then I can close. This short here is kind of it's stacking up. But it's been a pretty good period, really. I was saying, I don't know if it was on Monday.
Yeah, you certainly got your direction right, mate. That's for sure.
Yeah, it's okay, mate. It's a bit of a grind, but on Monday, I think I was saying I'd be happy to make 4% this month. Well, actually, since Monday, there's been sort of like some really nice moves for me, because I've been managing to hedge some positions out, and just kind of like stacking things up. So actually, the month is very positive now. So if I can close this FTSE short position that's been sort of in existence since last month, then we're in really good shape. And
cool.
I just think that there's a decent chance we do that. I mean, the market, you were talking about the CPI figures, the inflation numbers continue to grow, and there's no real hint from any central banks that they are going to be curbing the interest rate hikes or monetary tightening. So the writing on the wall for the stock market is just generally a bit negative. The odds are really stacking against the stock market. The only caveat for the FTSE is because it is quite commodity heavy to the top end, the commodity stocks have been outperforming. They've been doing a lot better. So if you were to look at the DAX as an example, the DAX isn't doing as well as the FTSE in this current state. The NASDAQ isn't doing as well as the FTSE in this current state. When we had the explosive move to the upside, the NASDAQ was the place to be. Now we're coming down. Realistically, the FTSE is probably not the best place. It's probably not the best index to short, in truth. Purely because it does have those stocks that are more popular at this stage. While we've got this crazy inflation picture going on, really the place you want to be is in commodity stocks. It's the one thing that is kind of almost an inflation hedge. Sorry, John's just saying, you remember the pound interest rate in the middle of the 80s? Yeah. Still on some short, good man. So he took some profit Monday. Fantastic stuff, and that's what we got to do, isn't it? Just keep taking some money out of the market. We're not bothered about hitting the leather off the ball at all. Actually, 73.
That's even hits your TP2 bloody thing.
Well, that is irritating, mate, and I'm sure if you were in front of the markets, you probably would have closed that trade. There's my.
Yeah, but if I wasn't in front of the markets when the pound yen trade took me out, I wouldn't have moved my stop. So I would have made money there. And that's, I've always considered myself a pretty decent technical analyst, but I've never considered myself a great trade manager.
Yeah, mate, I know what you mean, and this is one of the reasons I'm trying to use more limit orders and things like that. I mean, it's such an interesting thing, isn't it? That
but that's where you make your money, right? You make most of your money is made in managing trades, not getting into them.
Absolutely right. And the amount of money I think we both probably leave on the table is probably pretty criminal. But but by the same token, you kind of when you kind of wake up the next day or the next few days, the week after, and you look at your overall balance, those trades matter little. You don't really worry about the ones that you've managed badly. But I know what you mean. I mean, I don't
I think everybody knows what I mean. It's a very common thing, you know?
Yeah, it's just
And it's the one thing that's hard to master. Really is.
Yeah, well, yeah, it's probably easier than we give it, credit for in a way. And I suppose it's just leaving things alone. That's the answer, isn't it? Just do your research, make your decision, and just leave things alone. And more often than not, you'll probably be in the right place if you do that. I'm just going into the next phase of testing that out.
I'm now going to sit and wait. If I've got big time frame trades, if I get back into smaller time frames, then that's a different story. I think I need to manage those micro lot or in micro fashion. But the bigger time frames, which is really all I'm trading at the moment, I think you're absolutely right. Set it, forget it, piss off, go and do something else. Well, I mean, I'm doing something else anyway. I just happened to be in front of the charts at the wrong time yesterday in micro. And shouldn't have.
Yeah. And it's funny.
And to answer your question, sorry, mate. I'll just address Anne's question. Look, I had a good think about this whilst I woke up at 3 o'clock this morning and got in front of my desk and started writing some things. I actually think the interest rates movements at the moment are not as important as they would otherwise be. And the reason I say that is because, as said it earlier, every central bank on the planet is now doing the same thing. So it's just a matter of when their announcement is or their statement is as to when they move.
Well, do you know
the only exception?
Sorry, go on.
Yeah, the only exception to that currently is, or two, the BOJ and the RBA. They just are sitting on their hands and not doing anything with their interest rates. But Australia are going to have to move, whether that's in the first half of this year or second half of this year is probably the only question. But I think what we saw yesterday with the Kiwi is exactly what you can expect. Not necessarily the big sell-off, but the initial reaction, which is, and I think the only reason we got the initial reaction was that it went 50 basis points instead of 5. But why it sold off so dramatically after that is something that I can't explain. I can explain why it did go higher, but I can't explain why it went so low, apart from the fact that the economy's in a shit situation and all the rest of it. And I think that's probably the story. But technically, and, as I said when I opened the show, the reason I stayed in that trade was because the big picture was telling me that this thing had to go down. And I still think that's going to be the case. Sorry, mate, you were going to say.
Well, I was just going to maybe shed some light on that, the reason that the Kiwi went down yesterday. And to your point about the central banks are doing the same thing, actually, there's quite a lot of nuances in there. When you sort of like dig a bit deeper, as you say, the RBA are in a different place. The Euro's in a different place because they are more likely to be forced. Their hand is more likely to be forced than led easily to starting to hike. So that the pace of what they do might be very different to everybody else. The United States is sort of they're certainly getting to the point where they may well start to trailblaze. The reason that the Kiwi all of a sudden took a dive to the downside is that there's a suggestion that what they've done is front loaded their interest rate hikes. So effectively, this may well be it. Pretty close to, the actual interest rate.
But they're not saying that, are they?
What's that, sorry?
I mean, they're not saying that. Who's saying that?
They are, but you know what? It's one of those things that, and it's typical kind of investors analyzing things. It's like there'll be one word in the statement that people pick up on, and it's that word that they focus on. Because the tone of their statement was almost like, in fact, they actually said they did say that, what we're trying to do is front load this interest rate. And the reason that they potentially are doing that is because if they don't front load it and they effectively don't try and get it under control as quickly as possible, when there are problems further down the line, which everybody's now seeing with a lack of growth in global global economy, consumers are getting further and further. The consumer confidence is diminishing further and further. So what the RBNZ are saying is look, if we front load this stuff, then we got some room to maneuver when the shit hits the fan, because it will, they're all effectively saying the same thing. So, you're starting to see that also expressed with gold. Gold starts to shoot to the upside because interest rate hikes are bad for gold ultimately. But what you're seeing is this inflation issue going on. But now the RBNZ are saying we're front loading. So what that suggests is that by the half when we reach the half point of the year, the interest rate hikes will either stop or they're going to slow down. And the reason they're front loading is to just try and give themselves some breathing space when things go wrong. So I think it was in the statement that's the way it read to me when I was kind of looking at that and I saw it tank to the downside. I thought, yeah, actually, you know what? If they have front loaded, remember they went first. So the others are now.
They generally do. It's not the first time this has happened, obviously.
Yeah, but the others are playing catch up. So now what the market is basically saying is you guys are pretty much done. Now everybody's got to catch up. So let's try and get into those guys a bit earlier. Because the RBNZ are starting to sound a bit nervous about what's going on. So I mean, fascinating stuff. Really, really interesting. What's
totally.
going on out
there. I was pleasantly surprised, I must say.
Yeah.
But yeah, again, when fundamentals meet technicals, obvious things happen. That's pretty much what happened.
Yeah, absolutely, mate. Well, we got this head and shoulders pattern forming on the FTSE, so that may well work out today. I'll have a quick look at what the wave rider is suggesting on the day as well, and it is saying you can have a look through these as well. Aussie Kiwi long. Aussie Kiwi long. So let's bring this onto a daily, and this is a breakout bar. Wouldn't be my preference to trade a breakout bar. So the first one, if we utilize the signal, the first thing is that the signal is yes, there is upside. Yes, this is a bar that is described, in the wave rider as a potential area to go long. But that is a breakout bar that has broken out of this particular level here. And that was previous resistance, if you like. It's come down, broken out of there. Not interested in that at all. So until maybe this day or a couple of days' time, this particular setup would not interest me personally.
100%. It's just so overbought.
It's so overbought, yeah, absolutely. And as I say, this is an extension leg, isn't it? So you don't want to trade the extension leg. And it's interesting with the go on, mate.
Yeah, sorry. And you really do need to consider, in my humble opinion, that the interest rate differential between the Kiwi and the Aussie right now is 1.4%.
Unbelievable, isn't it? Yeah, absolutely right. Yeah, and as you say, the RBA will be probably getting closer and closer to being pushed into a corner. So you'd expect them to be doing something relatively safe.
Yeah, they're either going to have testicles like King Kong, or they're going to have to go, aren't they? Really?
Yes, absolutely. So no good anyway. No, that one's no good. Next one's Aussie dollar, and this is also for a long. But geez, you wouldn't want to trade this. I mean, what you got here is so where the previous one, was still with the trend. This is the support level, and this has broken through that support level. So this is now looking like there's a potential for this trend to actually reverse and start going this way. So again, that one's no good.
Again, I 100% agree. And if you were to draw my symmetry line after you're dead between the double bottoms, just a vertical line between the double, a vertical line, sorry, between the middle of that.
Gotcha. All right. Let me bring up a straighter line.
That cycle's complete, right there. So that's done and dusted. Yeah. The big W is over, right?
Yes, I see what you mean. Yeah. So what Jeff pointing out?
Yeah, I've got to be bearish.
W that there, and you got W pattern. And we're on the neckline of that W pattern effectively. So it needs to break through there to really give, another measured move, which would be around about this space here.
Yeah, good luck with that. When the Fed is saying they're going to raise interest rates 6 times this year, good luck with that.
Yeah, absolutely right. So Aussie dollar is also out. No good for that one. Euro Aussie.
Yeah, I like this. I've got a trade in. I've got an order in place here.
Now this one's a short as well, mate. You like that for the short?
Yes, I do.
Okay, so Euro Aussie would be there's the trend line. Now this particular bar is problematic. The good thing about this so far is that if you have put your order in down here, if you've got an order in down here,
yes, well you know that's where my order will be. Yes.
Yeah, and if your order's down there and this is going that way, it's going to be going that way, you'd think, because it's tried to get up here and then it's just going to rock to the downside. So with you on that one, that one's much better. Not sure about the take profit area. So let's just have a quick look.
Well, you know where mine will be at the close of the red bar.
The close the red bar. Let's just have a look at the lows here. Yeah, there's some room. There's definitely some room when you look at this on a monthly.
Yeah, I've got 100 pips out of 174 risk, so that's okay for me.
Yeah, no, I think that's. Yeah, I'm with you on that, mate. I think there's some room with this one. So Euro Aussie so far would look like the better of all of them. I like that. Obviously, ECB out today would make this trade more dangerous if it was near the entry now, but because it's up here, actually looks pretty
I agree.
Good,
we're far enough away from it not to worry about it. Yep.
Yeah, Euro CAD is the other one, and I think interesting with this one. Let's just have a look at the room to the downside with this one. Yeah, that's got some room as well. Not much, not as much, but it's got a little.
You're trying to make me cry again, aren't you?
Well, why did you like this one?
No, you remember I got out of that just before Christmas.
Oh, yeah.
Look at it.
Okay, so Euro CAD's an option as well for some downside. I'd like this trend line tested really, but it's there is an option for some downside there with the Euro CAD. Again, I'm not sure how far it goes. It's a little bit of room to the downside, but the Euro Aussie looks better for a short. I think again, if this starts to cross but below that level, particularly because of that ECB press conference, that would actually look pretty good. Oh, you're welcome, man. No problem at all. Yeah, exactly. Yeah, that's what I'm looking at. Actually, I'm just looking at the wave riders of the day, just so we get just to help you guys out a little bit. Pound yen is the other one, mate, and that's for a long.
Really? Thanks.
Yeah, and again, look, I mean, do you know what the difficult thing with this one is that not only do you love this one, do you?
That's the one that I got into yesterday, and moved my stop loss and got hit.
Okay. Okay. Well, I'll tell you why I think this one's problematic is there's the breakout there, the initial breakout there. So you got one extension, then you've got a little bit of a support level. So you've got 2 extension bars and you've got this area here, which is right pretty much slap bang where we are right now. So I suppose if you traded above that bar, not so problematic, but the fact that it's an extension leg rather than pull back first, then give you something around here, it would be an issue for me. And really, I'd prefer it down there. I think it's gone too far, too fast for a trade, in my opinion, of any kind of safety. But what a fascinating month we've had, mate. This is basically March. Okay, March does start a few days back, but this is basically March. Look at that. And now we're in April, and April's trying to continue what happened before. But I think we're in a different phase right now. You know, the benefit that happened really in March is that things started to calm down just a little bit. Central banks weren't, at that time, they hadn't started to move. I mean, I know the Kiwi had, but they hadn't started to move. Now we're starting to get that movement. CAD raises interest rates as well yesterday, and they're all on the run. They're all now on the go. So I don't think we've got the same quite the same market ECB still fascinating, and I think the Aussie Euro. If I was going for anything today, it'd be the Euro Aussie. That seems to be the standout trade for me.
It's the one I chose. Yes. Yeah.
Fantastic. Okay, so putting in another
not
question.
Not on a wave rider basis, but I suppose it's exactly the same trade. Although wave rider wouldn't trade where I'm trading, I wouldn't think. As I'm trading underneath that bar, as you pointed out, I don't know where they trade.
I don't know. Sorry, I was just reading a question here. I've got something that was on somebody's market scanner on April the 11th. It wasn't on mine, and I have to say mine probably isn't the updated one. No, it wasn't. It's not on mine. That's for sure. 6.7. Have I got that same one? I don't know. It can be a number of reasons for difference between. Okay. Yep.
I've got to say that Euro Aussie, if you're a slingshot trader, is actually set up reasonably well for a long today. But it's also set up for short. So name your poison. But I think the short's a better setup, frankly. But that doesn't mean it's going to work.
Yeah, I think you're right, man. I think really when it comes down to the Euro Aussie, because it's on a daily time frame, looking at the daily, looking at the bigger picture and what's going on kind of fundamentally is important. And we don't really know the full extent of what's going to go on fundamentally with the Euro until they've had their announcement. Who knows what they're going to do today? I mean, it's going to be difficult for them to stay where they are. I'm just going to share this with Swee. Swee's just asking if there's any news from the pound, and yes, there is very big news from the pound. This is the news from the pound yesterday. So we're saying the US session, the pound started to move. This is the key here, and I know it happened early doors, but this was the key. 7% inflation. So CPI year on year is at 7%. So further pressure on the Bank of England to move interest rates and potentially move them quite aggressively as well. So it was the news of the day. When you're looking at what happened during the US session, it may just well have been that the traders were waiting for that particular session before they got into their positions, but that was effectively the news of the day. That's why it was so keen yesterday.
Mate, what do you reckon would be the best on balance currency trade, given what the Fed has said? So you've got to be thinking, and I hate this pair, dollar yen. You've got to be thinking dollar yen.
Yeah.
You got to be thinking Aussie dollar short at the moment until the RBA says something or does something, frankly. Because the Fed is so hawkish on interest rates, the US dollar is not going to come down anytime soon.
No.
It will crash. Believe me, it'll crash one day.
Yeah.
But not during this interest rate hike cycle, I don't believe. So you've probably got to be thinking US dollar strength across the board. And if you're thinking that, then you've got to think, well, what are the weakest currencies? Or what are the central banks who aren't going to raise interest rates? That's kind of the thought process I go through. So the yen's just a sitting duck, isn't it, against the dollar?
Yeah, the yen is a sitting duck, and I guess this is where the market becomes a little bit more difficult because the yen is a sitting duck, and they don't seem to be sort of changing their stance. But the price is now getting so elevated, as you say.
It's like a skyrocket, isn't it? It's just gone bang,
yeah,
like
and it becomes dangerous. That's the problem, isn't it? Now is that it becomes a very, very dangerous trade now to sort of take on that dollar yen or Aussie yen or anything really against the yen, because it only takes them to change their wording very, very slightly for investors all of a sudden to turn around and sell it off, like we saw yesterday with the Kiwi. The Kiwi's been hyper hot. And they changed their stance a little bit. They changed the rhetoric just slightly, and it was enough to drive the markets lower. I think if you were going to trade something which is just a little bit has a bit more room, I would come back to gold. You know, I think gold is yes, it's started to move a little bit more, but because of the inflation narrative, what's going on right now is that the messaging from gold, what we've seen is yields popping higher, interest rates going up, and concern out in the and inflation continuing to go higher, and gold going higher with it. So gold has headwinds. You know, with interest rate rises and yield. The treasury yield going up, it does have headwinds, and yet it has started to go, and that suggests to me, gold and silver, by the way, but that suggests to me that people are now starting to buy gold for what's going to happen. You know, what they're starting to get more concerned with is that inflation remains entrenched, and yet interest rates can't continue to go higher because the economy starts to choke. You know, the global economy starts to choke. That puts gold in a gold and silver in a very, very interesting position right now. Even though it's started to move up and it's on its way, it isn't anywhere near the same kind of price action that we've seen against the yen. So even though the yen, you're absolutely right, mate, would be top of the list, is it tradable because of price? And that's where it's not, but I think gold is. You know, gold is at what's it currently sitting at? Something like
1970 something.
1980, yeah. So it's currently at 1980, but it's just above the monthly pivot, and it's as I say, hasn't gone yet. You know, there's still, you're around about 1960 is around about the area that gold becomes really interesting, but 19 or even 1970, where that monthly pivot sits, that's still interesting, because you got 2000 sitting above that, 2100 sitting above that. It's got some room. It hasn't got to those crazy highs. The yen has, the dollar has, and people are getting tetchy. I think we saw that yesterday with the Kiwi. People are getting really tetchy, and this is the time you say, shall we move somewhere else? And I think that maybe gold and silver could be a play for that.
I can probably silver, another one of my favorites. I can probably be talked into silver, but I can't be talked into gold right now. And the reason is the chart. The chart is just screaming double top it. Cannot, as I keep saying, I can't not see the double top.
Should we have a look, mate? Let's see what you're looking at there.
On gold? Yeah, sure.
Yeah.
I'll show you a few double tops if you want.
Yes, let's do this fine and then get to the quiz.
But there's the weekly chart on gold, right?
Yeah.
I mean, you've got to close your eyes and open them real fast 100,000 times, and you're still going to see the same thing. There's a massive double top sitting there.
I see what you mean, mate. But don't you think that there's validity to say the direction of travel here is up, and that double top is likely to be retested more so than it coming down from here? I mean, I know it's in a bit of a mid zone, but that looks to me like the momentum is now going. And given the information that the market has, they're still buying gold. They're not now worried. They don't seem as worried about the interest yields, and they don't seem so worried about interest rates rises. So by all intents and purposes, the next level that is most likely to be tested is the one above rather than the one below.
I agree with that. And that's not going to change a thing if price goes to there, which is that high, which is what, 2051. So that won't change anything. And I'm not saying for 1 second that I'm going to just jump in the market short because I can see a double top. That's folly, and will send you broke if you trade that way. But if I see this fail to take out these highs and give me a bar that I can trade, I don't care if it's on the monthly chart, I'll trade it.
But if you look at the daily
weekly chart,
if you were to look at the daily chart and you said, okay, gold comes back and tests just under that monthly pivot or the monthly pivot around about the 1965 area.
Yeah, it's a buy. Yep.
It's a buy. So if that is a buy, then it isn't there an argument to say, buy it there, let it go up to that double top. That's where you take some profit and then just ignore the rest, and see if it goes through. Because if this does go through, it's going through a long way. If it doesn't go through, you've still made a decent chunk of change on the way up to that particular point.
Yes, I agree with a pullback, 100%.
Yeah. Pullback,
but you can't buy it.
And long.
You can't buy it now.
No,
it's 1, 2, 3, 4, 5,
it's not good now. I agree. I mean, as if you were an investor, I think you could probably still say, fine, I'll buy it in here because it's going to that upper line. But as a trader, no, you can't, because you've got to figure out where you're going to get out. So yeah.
I mean, you can. I mean, you totally can. You could buy it here at the breakout there and put your stop loss here.
Yeah, it doesn't make that upper line quite as attractive, though.
It doesn't, but that looks to be a fairly reasonable position to take, I would have thought.
Yeah.
And if you're prepared to take 2/3 to 1,
yeah,
then I don't see a problem with that.
Well, do you know, the only way that I think that would be relevant is if you did get in here, and if price did explode to the upside, you put your stops at break even and actually see if you can extend that 2/3 to 1 to being more like a 3 to 4 to 1. If it explodes.
Yeah, get your risk off the table.
Yeah, just get your risk off. That's the only other way I'd say you could buy it here. But yeah, interesting one, mate. I think this is the one though. Anyway, that's the one of most interest to me is gold. I think the others are a bit vicious, quite volatile. The pound is of interest. Because with those CPI figures yesterday, it looks like there's going to be some change in the Bank of England stance. So the pound is, I think, potentially another one that's a buy purely because of price. This is the thing, isn't it? We can't just take into account what the fundamental picture is. We've got to say, yeah, but is that priced in? Has that been priced in? And it may well have been if it's exploded in one direction or the other. So it becomes a lot. The decision becomes a lot trickier. It's not quite as binary as saying the dollar's strong, the yen's weak. Let's buy the dollar yen anymore.
No, that doesn't quite work like that. That's true.
Yeah.
Just before we go to the quiz, I will embarrass myself yet again. Well, not really, because you either can find a way in or you can't. And I haven't been able to find my way into pound Kiwi. We've been speaking about this for weeks, and now it has started to take off. I will be looking seriously for a retracement on these moves to get in long, exactly the same on pound Swissy. I don't know how you get into this trade, frankly. I just don't see a way in unless you're a scalper and say, okay, once it hits that level, I'm going to buy it. But that was news, right, yesterday. So, you're really second guessing. But they were the two that I've been looking at for 2 weeks now, and sadly not in either. But a pullback to the pivots makes sense to me. Kiwi CAD, you know about Euro Aussie? I do have an order on Euro Aussie, and it is indeed underneath that candle, stop loss above it. But those of you who know how the slingshot works, you'll also recognize that there is a slingshot pattern sitting there, and then there's one in 3. This one's suggesting long, this one's suggesting short. I've chosen this one because it's also a double cross on the pivots, both daily and weekly, and I love double crosses. So my first take profit is at the close of that bar there, which is a fairly decent 3/4 to 1 or something, 100 out of 174 pips, as I said before, not 3/4, but what's that, 5/8, something like that. It'll do, close enough, and that's a pretty reasonable first take profit for me. I'm happy with that. And as we said, the ECB is going to determine the fate of this, no question, in my mind. If perchance we actually get a rally on this chart, courtesy of the ECB, then fail, come back underneath here, in particular if we came back underneath the pivots and retested that area, then you're probably entitled to put your entry up here based on that. I will be asleep when that happens, so I'm happy where my entry is, but If that were to be the case and you're awake, I think that's a pretty good trade. If we get back underneath here and retest, I think that's pretty cool. Now, there is also a standout. I think I said this exact same thing to you on Monday. And if that was Monday right there, we were talking about this one up here. It actually played out to perfection. Took a bit longer than anticipated, but it did hit that target, which was the daily pivot, but it hit it the next day. So your entry was pretty clear. If I can go back there, it was either on the 30-minute chart or the hourly chart, and it was exactly as I described. We got break, hit the highs, consolidate, back underneath, retest, daily pivot is your target. There is your entry either on that bar or on that bar. Either one would do, and you would have got your money. You would have had to wait till the next day, but you would have got your money. Fast forward to Thursday, we've got exactly the same scenario. Nothing's changed. Break above, we've hit a resistance level. We need to come back underneath and close underneath that trend line. Then we need to retest it. Then you can play a short. This is actually better set up because there's tons of room to take profit before the low of the day here. What we don't want to happen is price to go bang and not give us an entry. So watch out for that one. Back underneath the trade line, retest it, enter short, target daily pivot, get out. That's me.
Good stuff, mate. Well, I think it's probably quiz time, isn't it?
Oh, yes, it is. Absolutely quiz time. G'day, John.
Good.
How you doing, bud?
Yeah, I'm good. I'm good.
Oh, sorry, mate. Lewis, can you ask me that question after the quiz, please? Or I'll answer the question after the quiz.
The quiz is nice and easy today.
I don't know what it is yet, but
Nothing stressful. Right.
have you had a haircut, John?
No, it's all
Just buttoned up. There you go.
It's all still there. It's
A good man.
yeah. No, I never had.
I had a haircut.
Yeah,
It was this one here.
I had 9 years of short haircuts. Once I left that environment, I decided that I will decide when I get my haircut, not to the sergeant major.
I know which sergeant major you're talking about.
When I was in the mob in the 80s.
I thought you meant the cheese and kisses.
Oh no, she likes the hair. She likes the hair long, so we're okay. I'm going to try and share screen. Continue. Your desktop one. That one.
Have you got power?
Yeah,
You do?
yeah. No, it's just I switched my screens round, so instead of the screen being here, it's on the other side. So everybody should see like it should be view. Light on
BBPT,
now.
otherwise known as the Thursday Theatre of Thoughtfulness.
Very good, mate.
I need a navigator. Okay.
I haven't said that for a few weeks.
Okay. Hopefully it'll be fairly straightforward to everybody. I can't see any, as always, Zoom has gone and hidden everything, which is outright. Okay, but there we go. What does IMF stand for? I've made this quiz sort of easy, like for me, because I took a bit of time out.
I think that's all right, mate. Nice, gentle quiz.
Yeah.
Nothing wrong with that to finish the week.
As long as I get 5 out of 5. I mean, 5 out of 10.
Okay. Yeah, you got a choice there. They're all a play on the same thing. But you should have got the International Monetary Fund. Unfortunately, I think there might be quite a few people queuing up.
Yeah.
Okay. This is obviously a test for myself as well. Hopefully I've got the question right. Which of the following is a Forex major pair? This always used to confuse me, but I now know which way to look at it. And everybody is, as they say, on the dough. Okay. This has featured quite a lot, but it is featuring quite a lot in everybody's daily read, or it is sometimes, which is the home headquarters of the UN. One of those famous cities. And we should all agree that
I'm glad Basel wasn't an option, because I would have chosen that. But I do remember this one from time before.
Yes, yeah. I'm sort of refreshing it. I'm refreshing my own brain, to be fair.
You're looking after mine, mate. That's what you're doing.
What does BIS stand for? Banking International Standards. Bank International Standards. Bank International Settlements. Banking Internal Settlements.
That's a good question.
I know
idea.
the layout of that type of question. Obviously, you've got to know your answer.
Lewis kept kind of coming in with like, what do we have? S.
Oh
S,
dear.
S and F. And I was like, why is he doing that? And he just said the shift key was.
That happens to me quite a lot, I think. Bank of International Settlements. It is in
it was one out,
Switzerland.
bugger.
Yeah. Jeff, gotta stay cool, man. You gotta make sure that bridge.
Yeah,
This is
right.
a trick question. Ish. How many G20 member states have a bank holiday tomorrow?
Right.
Yeah, I'm being a bit, this is like an awkward question, but this, well, it's Germany.
I'm going to have
Canada.
to go. Oh, bugger. I went.
Sorry.
You told me it was a trick question.
Well, it is, because if you look at Forex calendar, there's a lot of countries have got a bank holiday tomorrow, but only 2 of them are members of the G20.
Ever.
There you go.
Yeah, but the emphasis is there is my daily routine is I check Forex Factory first before I do anything. I'm looking
I've
for
got 2
those
wrong now.
I'm ready.
How many?
Red. Oh, you
was that
got
number?
5. You got 5 more to go, Jeff. So you can easily sneak back in.
I can pass.
Just
Awesome.
block a few, and you'll be okay. And hit,
I
a few
always
sixes.
come home with a wet sail.
I think the next one might be. Oh yeah, this one might be easy. Which one of the following countries is in the spotlight for a possible dollar default? It is happening sort of right now. It's obviously, if you're in this part of the world, you'd be. Yep. Good. Yep. Ooh, made it too easy. Oh gosh, I'd love to meet some of these guys and give them a tune-up. What does LME stand for? I've missed out something there. But one of those things. It should do. Yeah, they'd probably actually be better off doing it. London Metal Exchange. These are the characters that said, you know what, we're gonna wipe out the day's trading. All the trades you made today? No, they didn't happen. They did it on nickel silver. They've done it 3 times apparently. I found that story quite interesting. Okay, which countries are currently changing their thinking on joining NATO, and quite quickly?
Oh,
Luxembourg and Liechtenstein, Finland and Sweden, France and Italy, Iceland and Greenland.
I don't know.
You don't know.
Everyone's going B. Maybe I should too. No, I'll go. Yeah, can't be C or D. So it's either A or B. Everyone's going B. I'll go A then.
Awesome. Is this why you never won at horse racing?
Exactly.
Okay, question 9. Which currency is used at the moment to settle sales of oil? And I do believe
Yes, at the moment. Oh, I've got two ones. Two letters.
You're going for a bonus point there, Jeff.
I need one, don't I?
Yes, the US dollar. Last question for this week. Yeah, which city is home to NATO headquarters?
Now, I got this wrong last time.
Yeah. Yeah, everybody's rumbling in on Brussels.
Oh, I said Brussels last time. It was wrong.
Yeah, well, Strasbourg's part of the European Parliament setup. Brussels is the home of NATO headquarters. Berlin is the new home of the German Parliament because obviously when it was split, it wasn't there. Rome is a great place to visit. I'm not quite sure if their parliament sits there.
I didn't take it because the spelling was wrong. That's what it was.
My apologies.
Another trick question.
Yeah. Okay, there we are. Well done.
Well
Cool,
done,
good
John.
one,
That was a
mate.
good one.
Hey, Zach, which answer, which question was B, mate? I think you got it right. Anyway, well done. Okay, there's Quizland, mate. I missed you last week, John. Has everything settled down over there? Or?
Well, okay. In a nutshell, we're in the middle of Ramadan, the holy month for the people who follow that. So it brings out a level of intenseness in driving, and I'll put it politely like that, because it's insane. I take my wife to work in the morning and bring her back, but not today. It's my day off. Yeah, it's quite bad. But all the water's done and everything else like that. Just dealing with visas a little bit. So I've taken like April to April, as I said to Ash last week, for my trading because I'm a Brit and tax returns in the UK. So just at a very small position on the FTSE, and I'm looking at all the other currencies and I'm just leaving them there. I'm looking at where the yen is, and I'm thinking, okay, yeah, I'm not trading that. I'll wait for a short on that one. I've seen the yen over the 2 years. When it goes, but it can just go the other way. And I've lived in Japan, and you never know it's going to happen until it happens. Does that make sense? Because you don't, even though you're in the community there, and it's great, you're never really part of the community, so you never know really what they're thinking.
Yeah, it's going to get difficult. I think the yen is going to become more and more difficult because there will be. Do you know? The thing about the yen is that it might not even be that the yen strengthens. It might be that there's some other shock to one of the other currencies, and people just flood to the yen pair, just to kind of express their concern, because there's not really any reason for the yen to strengthen. Even their trade balance is pretty poor right now, and that's sort of, historically been their big thing. So, yeah, Gary said about China, exactly. I mean, that story has been relatively there's been a lack of expression for that particular sort of scenario that's been going on in China. The market hasn't really sort of like tanked as yet because of lockdowns, but that is going to have another effect on global growth. So it might be, as I say, the dollar or the Fed or the Bank of England or the ECB might all of a sudden come out and say, do you know what? We can't do anymore now. We've got to wait and see what happens. We've raised interest rates. We're trying to slow inflation. Inflation's maybe come down a little bit. Now what we need to do is just cut back on the aggressive policy, because we're now concerned about growth. Inflation's the front and center right now. But when inflation comes off a bit and growth becomes more important again, then the central banks will have to pivot. But obviously the Bank of Japan won't be pivoting. So it might be that the others weaken rather than the yen strengthens. And as you say, John, it could go like that, and you could be caught in a trade, short against the yen that could reverse very, very quickly for a period.
Yeah, I think it was maybe a year and a half ago, I got caught in, I think it was a sell, bang, it just wiped out.
Yeah.
During the day going nicely, and then all of a sudden,
yeah,
off you go.
yeah, very difficult to do, I think. And you know, there's got to be a point where the price just becomes too oversold. You know, for the current environment, and we may be getting close to that. It's difficult to know because we still don't know what the central bank's actions, what effect is going to have on inflation. We also don't know at this stage what is going to happen to fuel costs over the course of the next 6 months to a year. But I think most people were initially hoping that things would calm down. You know, the whole thing with Russia would calm down. But all that's happened is that it seems now that that both sides and both parties are becoming further and further entrenched in a tug of war. And this thing could go on for years, you know. But I think both sides have probably at this stage got the ability for it to last a long, long time. And while Europe and the rest of the world still purchase energy from Russia have also got the ability to pay for the conflict. So until that changes, then no, I don't know what is going to change things around. But there's a lot of things that haven't yet been priced in, and I think that, you know, a long war is one of them. A change in energy policy is another, you know, as people pivot somewhere else, or, you know, green energy, whatever else takes off. The China situation, as Gary said, is another thing. So things could change.
Look, things could and do. You know, 6 years ago, who'd have thought Brexit?
Yeah.
5 years ago, who'd have thought, or 6 years ago, almost nearly that, who'd have thought Donald Trump?
Yeah, absolutely, mate. Yeah. Absolutely.
And it just changes everything. It just changes the whole structure.
Well, we're having a lot of that, aren't we? When you sort of like consider the catalogue of events we've had in the last 10 years, it's been huge. Yeah, Brexit, Donald Trump, COVID, conflicts, trade wars, you know, it's North Korea. It's just, there's just a lot of things that are seem to be happening faster and faster, maybe faster than they ever did in history. Where we'd wait for recession every 10 years plus. Now we're sort of going, could happen next year, could happen this year, you know. What is a recession? Would the COVID-19 crazy V-shaped bounce qualify? I don't know. It's just the market is very, very different than it was 10 years ago.
It is.
Very different.
Yet that pink line on my screen, you still see this.
Yeah, Carrie says France leaving Europe. I mean, that again, you know, we got the Le Pen situation, you know, potentially sort of like changing things in France in the next few days, and you can never say never. So yeah, no, I see what you're saying, mate. Yeah, so you got that green line. Yeah, so things have changed, and yet they haven't.
Yet they stay the same, 100%. And I'll point out a little bit more on this chart to you. You know, my penchant for symmetry, right?
Yeah.
You draw a line down there. Whoa, that's a crooked line. But what happened over here did exactly the same thing over here. The cycle finished.
Yeah.
Went up again. We got another double top. What happened over here happened over here. Finished. Went up again. New cycle started here. There's the midline of that one. What happened over here happened exactly over here.
Yeah.
And went to where? Exactly the same level. Fell away. There's your line of symmetry. There's your line of symmetry. There's your line of symmetry. Look what we've got in front of us right now.
Yeah. Oh, mate. Yeah, completely. Yeah. Nice analysis. And that tells you, just don't trade the dollar yen from this particular point long. You know, you shouldn't be looking 100%. For long at all. Yeah.
Although it just looks like a sitting duck, and everything's in your fiber is telling you that it's a sitting duck.
Yeah.
The chart's not saying that at all.
Yeah, Sweet, you're right.
Saying that at all.
Sweet saying it's the beauty of chart patterns, and that's the thing, isn't it? You know, what as technical analysts, you know, along with fundamental sentiment, we can really kind of, I don't know, get ahead of but what we should do, what our behavior should be. And this is definitely suggesting that the behavior should be leave this one alone for right now anyway.
100%. And I want to show you one more thing before we go. And I did hint at it earlier, and I just had another look at the chart and I thought, okay, that looks pretty obvious to me. And I haven't done this exercise, but let's do the exercise and I'll be very, very surprised if I'm wrong. Looking at the euro dollar chart, and I told you about this before, exactly what happened on Monday is setting up to happen again today, where we're looking for price to come under here, retest it, trade it down to the daily pivot. But then I looked at every day for the last week or so, and it's done exactly the same thing. And I'll absolutely almost 100%, make it 95%, guarantee that this has bounced off something before it's gone to the daily pivot, bounced off something before it's gone to the daily pivot, bounced off something before it's gone to the daily pivot. Same yesterday, same the day before, the day before, same yesterday. And now we're looking, and how do I prove that? Well, I put the pivots in. I haven't got the pivots on this. Oh, yes, I do. So if I prove that to myself, I'll put in DR1 and DS1, 1 and 4, that is. Make them a bit thicker. Hello. That's thick, that's thick. All right, okay. Now I've got to put them on every single one. Sorry. Go to there and...
do you know what, mate? Yeah, it's okay. I was going to say, you can take your time, actually, because people probably don't know how to do that.
Oh, okay. Now,
That's
here's
okay,
exactly what I was... Here's exactly what I was saying, and I can see it. I don't have to put this on the chart. It hit that level. DS1, bang, daily pivot. Next day, hit that level, bang, daily pivot. Next day, bang, hit that level, daily pivot.
Well, look, even the previous day. So when it went, when you were on the 7th, it's gone from the DS1, hit the DR1.
Here.
Sorry, it's gone from DR1, hit the DS1, and gone back to the daily pivot, then gone back to that DR1, come back down again.
Yeah. So when the euro dollar is in this mood, it is so easy to trade.
Oh, look at that, mate.
Now,
look at that.
Yeah, it is so easy to trade. And this is how I learned my craft. This chart, euro dollar, and when it gets in this mood, boy, oh boy, I told you guys years ago when I was trading this, and it was the only thing I would trade. When it got in this fashion and did exactly the same thing every day, I would turn on my chart 10 minutes before UK open. I'd trade my first trade at 1/2 the hour, and by an hour and a half later, I'd done my work for the day, because it was just that simple.
Amazing.
And I haven't seen this for ages, but I just saw it then when I was looking back, and holy shit, this is doing this every day. It's exactly the same thing every day.
That's amazing,
of
mate.
course,
and you know, what's great about this?
Are no indication of future, right? So
yeah. But what's great about this is that I mean, I think your first job as a trader when you sit down is to figure out the sentiment, figure out which direction you're going to trade in. This tells you, doesn't it? If it's a DR1, you're trading short. If it's a DS1, you're trading long. It's just then you just need the signal. You need the detail.
Yep. Now, it doesn't do it every day, guys. But when it's in this mood, boy, oh boy, it's super reliable.
Yeah.
Today, we've got ECB, don't forget. That could change things.
And if
I see that set up, I'll trade it. Mm-hmm.
I mean, the analysis on this one would be fascinating. The question really to find out, anybody out there that sort of likes a little bit of homework, the question is, when are we more likely to see this over crazy other moves in the market? What's the dynamic? What's the dynamic which creates this kind of price action where it bounces off the DR1, DS1? What's the global dynamic? There's something fundamental that gives you, that would point you in this direction, saying, right, we can now trade the euro dollar in the off the R1 DS1 for this period because we are in that particular dynamic. Is it seasonality?
In that particular market cycle? Yes.
Yeah. Is it fundamental? I think you would probably be able to find something which would suggest there is a pattern forming outside of the charts that then lead you to the charts to be able to trade it.
As you say, great homework.
Yeah. You going to do it?
No. But somebody will, and someone will tell us.
Someone somewhere in the world will do it, and they won't tell us.
It's Good Friday tomorrow, and I'm delivering bamboo to the north of the state. So that kind of tells you why I'm not spending much time in front of the chart.
No, mate. I know. Asparagus. Do you think that looks a bit like bamboo when you cut it up a little bit?
Very similar coming out of the ground.
Yeah.
It's like a shot of Viagra. It just goes straight up.
So what about when they're if you actually were to cut the top off and you just get the stalk of the asparagus, does that look a bit like a little young bamboo plant, do you think?
There is a subtle difference. The head of asparagus has got a few lumps on it.
Cut the head off.
And now what?
And then you got the stalk.
Yeah.
Do the stalks look very similar?
No. And the reason for that, the reason for that is asparagus has a head and a main body.
Yeah.
And it ends there. The main body is dependent on the nutrients to make it grow and how high it grows. With bamboo is like a telescope. If you imagine 50 segments of a telescope.
Yeah.
One comes out of the other, next one comes out of the other, next one comes out of the other. That's how bamboo works, right? So it shoots up like no tomorrow, and each one stops at a node, next one goes, next, like a telescope.
Oh,
so
mate.
There's a subtle difference.
Very cool. Very cool.
It is very cool.
A bit like a Russian doll.
Bit like a Russian doll.
Got it.
Yep.
Okay. Well, fantastic stuff.
They're very popular at the moment.
Thanks for education on bamboo and on the daily resistance and daily support levels. Very cool. So we'll watch out for this euro trade tomorrow. The market is just calmed down a little bit, but we'll see what entails by the rest of the day. Got to be careful actually today because we don't know what the ECB is going to say. So any trades that you currently have on could get jerked around by the time the ECB come on. So make a choice whether you want to hold those trades, whether if you're happy to do that, whether you want to close up and wait for the ECB to have their conference before you get into anything. A few decisions to make, but you're looking at currently around about 6 hours time. You should know what's going on with the ECB. Have a great rest of the week, mate. Have a great weekend to all of you. Thank you as always for joining us. Thank you, John. Love the quiz today. Nice and simple, which is I think sometimes what we need. Thanks to Marlon as well. 8 out of 10 you got, did you?
No, out of 10. I'm not sure.
Marlon, thank you, mate, for looking after us as well this week. And have a great time, guys. We'll see you next week. See you on Monday, as always.
Yeah, 100%. If you celebrate it, have a happy Easter, everybody. Those of you who get a holiday in its or because of it, enjoy it anyway. Have a beer or two and try and love someone. Have a great weekend. Thanks for being our trading buddies. Bye-bye.